All right, today is another very important episode of White Knuckle because very important things are happening right now. So today, I want to show you the cycle so that you can wield this sacred fundamental knowledge, okay? Good, because what's going on here? It's the debt ceiling situation emerging. We're coming to the season of the debt ceiling thingy playing out, basically. So, how can we figure out what might happen? Well, obviously, we can look back to history. So the first thing we want to look at is what happened in 2011, the last time the United States hit their debt ceiling. Well, all that matters is that on July 31st, 2011, Obama announced that they came to an agreement and they avoided default. Bottom line, this is the date that matters, July 31st, 2011. Okay, so let's look back to the chart of the S&P 500 on that day and see what happened. You can probably already see where I'm zooming into here. You probably can see it with your eyes right here. Look at this. Look at this. The week of Monday, August 1st, 2011 is this giant down candle here, right? So even though they came to an agreement on that day, the pain showed up right there. But what happened next? Market literally rips into an endless bull market that lasts for 12 freaking years. So keep that in the back of your mind. But the major point is that leading into this whole, debt ceiling resolution thing, the market was frothy. It was frothy. It was basically floating up higher and higher and higher into this whole situation. And it wasn't until they literally came into the agreement that the market dumped, right? So I said last week, I think these markets are more likely to rise for no reason than to dump for no reason. And that's because of literally inflation. That's because of money printing. That's because of how much liquidity is just floating around the system. The markets will continue to rise for no reason until something happens. And I think the next big event that we could at least expect is going to put some pressure on the markets is going to be related to the debt ceiling thing. I think there's also the banks too. So there's something going on with that. I don't know if that's going to play out sooner. I think the debt ceiling thing is going to play out sooner because now you have literally Janet Yellen talking about June 1st is the day that the United States runs out of money. So what do you do when you run out of money? You sell everything you have so you have money again, right? So it's pretty simple. Like the situation setting up is potentially a situation where it's going to be the self-fulfilling prophecy of people selling because they're anticipating the U.S. government is going to sell their assets to provide liquidity so that they can pay their bills, basically, right? And obviously, you got to consider that it's very likely that the United States will avoid default. They probably will come to some agreement relatively on schedule, but it's not clear when they need to come to a resolution. Janet Yellen is saying June 1st, so that's an important date. But it's like probably going to be one of those deals where it lingers past June 1st. Who knows? The market keeps rising and everyone's like, why is the market rising? June 1st is here. Everyone's going short. The market is rising because that's what it does. It will just wreck everyone who's anticipating such a thing. So you got to be patient with this situation and you got to make sure your call options are dated in like August or September, right? Because you don't want to be in the classic situation where you're losing money because you didn't buy long enough dated option contracts. So here's the thing. Let's look at the VIX at this exact time to kind of show you where my mind is and where I see the profit potential here. So if you look at the VIX and we go back to, July or the beginning of August 2011, what do you see right here? This is this moment right here. And this moment is the great financial crisis crash. So I'm not really expecting something like that per se, although that would be crazy and pretty profitable. But what I'm really looking at is this setup here because this is what happened to the volatility index leading into the debt ceiling resolution. So if we look here, look what the price of the VIX is right now. Literally $17.18. That's exactly where it was before it launched into this move. And how big did this move go? It went from about $17.85 to $48. So that's a pretty good jump. If you're holding call options, you easily just 10x your money. Easily. You may have way more than 10x your money in a trade like that, right? So it's the classic setup, right? It's a very, very classic setup. We've seen this exact thing happen before. where we know something is coming. We know that there's probably going to be a resolution, but that resolution is going to come at the last possible second. Leading into that resolution, there is likely to be some kind of panic, some kind of sell-off. And I think the most volatile instrument that you can trade in that scenario is going to be the VIX. And that's just because, a move from, let's call it $20 to almost $50, that's the kind of move that you can make a killing off of using options. So if we look at the VIX right now and we see that it could probably keep falling. I will say I bought VIX yesterday. I bought a lot of VIX yesterday because if we drill down, look what happened to the VIX this week. Like, it's starting to show signs of strength, basically. I'm not saying that, maybe this VIX spike is all that imminent. I still think there's probably 2-3 weeks, maybe even 2-3 months away. I'm buying call options that expire in September, just to put it into context. And I do think this event is going to take place probably in June or July, but I'm giving myself that headroom. But this, to me, this is an important sign of strength for the VIX right here, right? So it broke above the high that we saw in April. So that's kind of one of those signals where it's just like, okay, this downtrend on the VIX here is potentially weakening. And that sort of, lays the groundwork for a move that's going to be pretty impressive to the upside. And then when you consider sort of the backdrop, the fundamental backdrop of the U.S. economy, it's like, yeah, you better expect this thing to start to pick up strength any minute now. And I think that's what this signal was here to me. Like, it breaks above this, has a perfect downside retrace. And what do you think I was looking for? I was looking for a 702 or 786. I freaking got it. Look at this. That's to me an obvious buy. Now, not to say that this entire local Fibonacci structure won't be completely invalidated next week and the VIX just breaks this low and goes even lower. That's fine for me. I'm going to keep buying call options. Like, I'm prepared to buy call options for as cheap as they're going to come. And they could come way cheaper than they are right now. But at this point, it's one of those, this is how I set up a trade. It's like, I know that this trade is going to be a monster. So I'm not afraid of price continuing to fall lower because the setup isn't going to be lost just because the price falls lower, right? So as long as the fundamental situation doesn't change, then I'm going to keep doing what I'm doing regardless of what price does. And the fundamental situation is that we're coming into a moment where the United States is going to have to deal with a very important debt resolution. And in that process, I think we're going to see some major volatility. But I still think before that volatility takes shape, I'm talking about the sell-off type of volatility, I still think there's probably upside in this market. So yes, I'm buying VIX, but at the same time, I understand that I still think this market should probably continue to float higher to solidify the higher high. Because when the market sells off, I think that's likely to put a higher low in the sequence here to really solidify that uptrend. Now, I could be wrong. And if I'm wrong, good thing I already own a ton of VIX call options, right? So I don't even necessarily need to be right here. And I'm not trading based on the speculation that I'm presenting here. But I do continue to speculate that the market will rise higher because I think it's going to solidify a higher high here. And the origin of that higher high is really in what Bitcoin's doing. Bitcoin continuing to consolidate above the 236, really solidifying a solid uptrend here. And I think Bitcoin could go higher, absolutely could freaking go higher, hit up this 382 level maybe, or hit up this moving average, something like this, before it takes a dump and sets up a higher low. But as you can see, the uptrend for crypto has long since been established. And so what's also interesting is there another indice that's showing a clear uptrend at this point? And I have to say, it is the NASDAQ. It sure, to me, looks like a pretty clear uptrend, right? What do you see? You see a consistent series of higher lows and higher highs, right? So in this like little area we're in here, this is all higher highs, right? You don't even have, like, the NASDAQ looks more bullish than the S&P 500. Bitcoin and the NASDAQ are the two sort of bullish sectors right now. And that's kind of telling you that there is strength in the market, there is liquidity, there are buyers. So I do think this market can rise higher and maybe have like a pretty intense, volcanic eruption blow off top situation, maybe around that 702 or something like that, 618, whatever it is, set up that higher low. When you're setting up the higher low, that's when the VIX is going to go absolutely ballistic, move 200, 300% or something like that. And then all the money that you make on that VIX, what are you going to do with that? You're going to freaking buy the dip here, right? Because that's the uptrend, right? You're going to buy in this clearly defined uptrend. And that's what I think is developing. And of course, that's speculation. I can't guarantee or say with any amount of certainty that we're going to continue this uptrend. But it does seem likely if I'm speculating. But really, to protect myself from being wrong in my speculation, I'm just, holding, right? Like I have VIX that's going to be super profitable in the event that this market does dump to any degree. But at the same time, I'm holding long tons of assets. Obviously, crypto-related stocks, generally tech things, I'm holding bullish. And I'm not about to sell those things anytime soon, even if the market's dumping. In fact, as I've said, I'm looking to buy massively on this next higher low dip that I believe is forming here. So I'm sure you can see from my perspective, I see a lot of beautiful things setting up here, a lot of ways to make an absolute killing amount of money this year. It's that double whammy trade, right? And part one is the VIX. It's the VIX because I think this is going to be powerful here. I think it's the panic button, more or less, right? And they're going to press that panic button coming into that debt ceiling resolution situation, right? And don't forget, what's going on with interest rates here. It's like sort of the part of the interest rate cycle that we're in, it's telling me that this market is absolutely going to probably continue to rise here. Like after that higher low that I'm talking about, like potentially rise into a situation where it does potentially go into new all-time highs. I think that's possible because if I look at the Fed funds rate here, I'm thinking like, yeah, this thing is starting to roll over here, but really like this is still a very strong upside move. And if you've been watching the White Knuckle Report for the past literally like year and a half or whatever, you know that we have to stay bullish if interest rates continue to rise. We can only become bearish when interest rates fall. And that's based on what happened in 2007. Interest rates fall. Market has the great freaking financial crisis. 2001, interest rates begin to fall. Tech bubble pops. And even back here in the summer of 2019, interest rates begin to fall. And then what happens in the spring of 2020? COVID, market crashes. So the fact that this Fed funds rate is still showing strength, that's telling me that the market has upside in the foreseeable future. Like I'm talking, end of 2023 into 2024. It's really only if this thing starts to come down that we should worry. And it's possible that it can, right? We did have the Federal Reserve meeting this week, and what did the Federal Reserve say? They're just going to keep doing what they're doing. They raised 25 basis points. They're going to consider incoming data. What is the incoming data, though? They're referring to the banks, right? They're literally referring to, the KRE, which is the, regional banks. Look at this thing, right? They're pretending this isn't even going on, right? This is the regional banks collapsing because of high interest rates. So the idea is, yes, the economy is facing some serious downward pressure because of higher interest rates, but the Fed doesn't seem to care about that, and neither does the NASDAQ or crypto or gold or silver, right? So yes, one sector of the economy is suffering because of interest rates, but to me, it's like they're just going to let that suffer. And yes, there's going to be some collateral damage, but all things considered, interest rates can continue to rise because the broader market remains strong. It's only a small part of this market that is weak with interest rates rising. Now, I think this is going to become contagious, though. I think this is going to affect larger banks, and this is going to affect the entire financial sector eventually, but not now. So eventually is like when the market is potentially at all-time highs or somewhere close to that. That's when maybe this situation gets a whole lot worse. That's when the Fed is forced to lower interest rates because they don't want central banks to collapse, right? And central banks are probably holding treasuries for the most part, which go down in value as interest rates rise, right? So at this point, the Fed doesn't care that regional banks are collapsing, but they will care if central banks are collapsing. So I think we're still a far ways away from that. So that tells me that the Fed funds rate can continue to rise, and that means we need to be bullish. That means that we would obviously be buying a dip here that's a higher low dip, because interest rates rising tells us that the market is still strong, the broader economy is still strong, and we still have the period of time when interest rates go flat that the market can continue to rise as well, because the market has historically risen during periods where interest rates are flat. And typically, when they're flat, that's anticipating that they're going to go down. So you're getting that very, very frothy part of the market. So theoretically, based on everything I'm saying, this market has quite a bit of upside to it. But I do think in the near term, the biggest, downside pressure that we're going to see is going to be related to the debt ceiling. And that's coming soon, because you're already hearing Janet Yellen talking about June 1st, right? So it's like June 1st, July 1st, sometime in the summer, maybe around the summer solstice, something like that. You're going to see that major volatility. You're going to see shit hit the fan regarding that debt ceiling thing. But I think that debt ceiling thing is not like an existential threat to the market. I think it's likely going to be resolved potentially similarly to the way that was resolved back here. What happened to the market after that? Look at this. Look what happened in the market after that. It went absolutely ballistic. People made a killing amount of money, right? I think it's possible that something like this sets up, although I don't know if it's going to be like this crazy where you literally have 4 years of a bull market after that. I don't know if that's going to happen, because I think the banking crisis is going to rear its ugly head, well before we get into these kinds of areas. And let's just look at this. Let's just see what happened here, right? Yeah, so typical, right? Typical. See, what I think we're setting up for now is more like a 1618 situation, right? We come out of this debt thing, we avoid the default, and then we make it up to the 1618 before we have a major crash, probably relating to the central banks coming under fire here. So that's kind of why I still think, this market actually can, and maybe it will go to new all-time highs, right? And then the target, that's going to be the target. It's going to be that 1618, right? I mean, yeah. So what seems like the obvious scenario if we think that the market can go to the 1618 before the banks drag us all down to hell? Well, it's like, what's the next step here? This market shoots up into the 702 right on schedule for the debt ceiling, right? Then we get all the nightmares and like, oh, we're not going to resolve it in time. Oh my God, we're going to lose everything. And then you have this massive sell-off. Everyone panics, but really you're just setting a higher low after a rejection off the 702, and then boom. And then you just go crazy to the 1618. That's possible. Once again, I'm speculating. It's not like I'm basing any trades off that. I would be selling all the way into this anyway, but it's something I definitely keep in the back of my mind, because it doesn't seem like a lot of people are expecting the market to move to new all-time highs. So that's kind of what I expect is going to be possible, for the very fact that no one's really expecting it. But then also at the same time, the market can continue to rise and get frothy into that 702, because still people don't believe that this market has any strength in it. But to me, I'm looking at it and I'm just like, well, it's so far set up a series of higher highs and higher lows. We're looking for that one more higher high. Where would be the obvious place where that higher high could form? Probably be the 702. So, and then you look at the DXY and you get that final nail of corroboration. It's like, where's the DXY headed? Probably to the inverse 702, right? So you kind of have a lot of obvious destinations for these markets. So pretty clear, right? You see what I'm doing. I'm accumulating VIX call options and getting ready to make a killing on that so I can buy the dip, because I believe the dip that we're about to see is going to be pretty profitable. So that's what I got for you guys. I hope you're being epic. I hope you're thinking about the opportunities that are presented to you here and now. And I hope you have the keys to the kingdom so that you can wield them to become incredibly rich. Good.